Hey, Movie Trades! I want to do a video analysis update of the stock market. We'll talk about Apple, as well as Microsoft, SPY, Nvidia and AMD, Micron, Intel, American Airlines, and Southwest. We'll talk about Disney, Draftkings, and PENN, Tesla, NEO, Xpeng and Lee, QCLN, Visa, PayPal, and iPay, as well as Square. We'll talk about ARK, ROKU, and Netflix, Snapchat, Bitcoin, Ethereum, and Hut Mining. So we'll start with Apple from the May low. I believe this is a wave 1 and a wave 2. This is a big wave 3 that went past the 161.8% extension of wave 1. And this is a wave 4 that retested the wave 1 high. So if this wave 4 low holds of 154, Apple's within a wave 5 high right now. The length of wave 1 or the length of wave 3 placed at the wave 4 low give a wave 5 target zone of between 190 to 200. And we can kind of end the video right there, because if Apple's going to 190, if it's going to 200, then SPY is not going to be crashing during that time above 154. We have a very nice low for market bulls. And what would that mean if we had a correction through January and then right at the end of January, all of a sudden buyers stepped in? Well, it would mean two things statistically, and one of them is that for the past 20 years, we've had a correction right at the beginning of January, and then right at the end of January, all of a sudden buyers step in, and for the past 20 years, that's been enough of, a bear trap or a retail shakeout to last for a rally that lasts the entire year. Now, that's for the past 20 years. For the seasonality of midterm years, we also have a sell-off in January, and then right around the end of January, surprise, surprise, buyers step in, but in the midterm seasonality, it only leads to a rally into April, and then it's sell in May and go away. But we had that textbook, we sell off in January, then right at the end of January, buyers step in. If Apple's above 154, it might be the best chart in the market. We could end the video right there. It's going on a wave 5 to 190 to 200. And then we look at Microsoft. This is a wave 1 and a wave 2. I believe this is a huge wave 3. This is subdivided into 1, 2, 3, 4, 5 waves. This ABC correction corrected this entire cycle. It ended a wave 4 at the 38.2% retracement. So Microsoft can go, the length of wave 1 placed at the wave 4 low. If it's above 272 to 276, the wave 5 target at least is 378, and that could happen in 4 or 5 months based on the time of wave 1 placed at the wave 4 low. So above 272 to 276, Apple above 154, right? They can go on wave 5 higher, and that would be obviously in conjunction with SPY. So we look at SPY, very similar to Microsoft. I believe this is a 1, 2, 3, 4, 5 wave 1 and a wave 2. It's a huge wave 3 and a wave 4 that ended right around the 38.2% fib. So a nice level would be that 38.2% fib, but realistically, Microsoft and Apple are much more important. We can end a wave 4 and go the length of wave 1, place at the wave 4 low. Just like Microsoft, that can lead to a wave 5 that takes SPY into the 550 range. So that would be, if this was a wave 5, the kid at the bus stop blow off top, we'd have a very substantial correction after that if that's a wave 5. This is a wave 1 and a wave 2, a wave 3, and a wave 4. So very tight. More importantly, is Apple above 154, but SPY above 418. We can see a wave 5 into the mid 500s. So that would be very awesome. That would be in conjunction with Nvidia as well as AMD. So I'll say right now that I'm going to give the most conservative view of the two semiconductors, Nvidia and AMD, with Nvidia. And then for AMD, I'll explain the more aggressive view. So in Elliott wave theory, an ABC correction, if it's a very dramatic kind of 3 swings, a very scary ABC correction, normally that's a wave 2 correction that ends. Wave 4 is that classic triangle bull flag before a wave 5 higher. So I'm going to explain the most aggressive view with AMD. I'm going to give the more conservative view with Nvidia. The most conservative view is that this is a wave 1 and a wave 2. This is a large wave 3 in progress. This is wave 1 of wave 3 and wave 2 of wave 3. This is wave 3 of wave 3 and wave 4 of wave 3. So if we're above 195, the length of wave 3 placed at the wave 4 low says at minimum we'll hold above 195, and Nvidia will go into the 350s. So that's the more conservative view. But realistically, do wave 4 corrections look like this? No, they don't look like that. That's normally a wave 2 correction. So I'm going to give with Micron, I'm going to give with AMD the very aggressive view of what we could be seeing in the semis. So I think the more conservative view is Nvidia above 195 says the semis are going to make new highs, right? If that was exactly the case for AMD, then AMD is going to hold above 99. But if we see right now, a wave 4 correction normally doesn't go this deep. What AMD may be suggesting and what Micron may be suggesting is something a little more aggressive, that this is a 1, 2, 3, 4, 5 large wave 1 and a wave 2, and then this could be a wave 1 and an ABC wave 2 within the cycle from the May low. AMD could be ending a wave 2 between the 61.8 and 78.6% fib. That could take AMD, if it holds above 92, much, much higher. So Nvidia gives the more conservative view. Do we really need to make the argument that this is going to play out, that AMD is going to go, way past the 190s right now? No, but it's something to kind of think about for the future. Nvidia gives the more conservative view, we'll hold above 195 and make a new high. AMD says we might go a lot further than that. So above 92, AMD gives the aggressive view. What I want to show with AMD is what could be in the bigger picture, my thoughts on Micron and what Intel can do. So basically, all three of those semiconductors, AMD, as well as Intel, as well as Micron, they formed the dot-com bubble high. They all have this very similar base that lasts about 15 or 16 years. And if we look at Intel, Intel's kind of right here relatively compared to the dot-com high, right? Micron just recently broke above it. What I believe is that AMD is a leading indicator of what Micron and Intel are going to do in the bigger picture. They're not just going to go break this 2000 high, they're going to go a lot further than that. So that's kind of where I get the idea that maybe Intel and Micron, they might not be the laggards we think. So Micron gives a pretty aggressive view with AMD, but I think a pretty accurate view that this is a wave 1 and a wave 2. Aggressively, this is another wave 1 and another wave 2. More conservatively, it's a wave 3 and a wave 4. It doesn't really matter. All that matters is within the cycle from the October low in the short term. This is a wave 1 and a wave 2 that ended between the 61.8 and 78.6% fib. So if we end wave 2, very tight would be 72, a wider, better invalidation for a lot of semis would be Micron above 65. We'll go on a wave 3 higher. Wave 3 at the very minimum will be the length of wave 1 placed with wave 2 low. That would take Micron up to about 108 before a shallow wave 4 that retests the wave 1 high. Then wave 5 would be the length of wave 1 placed at the wave 4 low. That could take Micron to 130. So that's very similar to AMD, that very aggressive view that we're going to go on a wave 1 and wave 2, have a much more explosive wave 3 rally. So that's Micron. And we look at the bigger picture, what I've been trying to say is that I think that this is what Micron and Intel are going to do. They're going to follow AMD. They're not just going to go break this 2000 high. They're going to do what AMD did. They're going to go dramatically higher. So that's kind of the analog right now, is that Micron and Intel, they're right here, but AMD shows they could be a lot further higher than this high in 2000. So that's what I'm looking for Intel. It's a very similar idea in the bigger picture that AMD and Micron, they formed this exact same high in 2000. I believe that AMD is a leading indicator that they're going to go explode above this high, and that this is a lot of accumulation for years and years and years. And Intel and Micron, they might not be the laggards that we think. So here is Intel. I believe this is a 1, 2, 3, 4, 5, a large wave 1, and an ABC wave 2. There's really nice risk reward here. If Intel breaks below 43, then this isn't a wave 1 and a wave 2. If it doesn't, then it is. This is a wave 1 and a wave 2. The minimum wave 3 target is way up in the 70s before a shallow wave 4 and a wave 5 higher. So if wave 4 retests the wave 1 high, wave 5 is the length of wave 1 placed at the wave 4 low, in the future, Intel above 43 could lead to a pretty substantial rally, ultimately taking Intel into the 90s. So that is Intel, that is Micron. That's kind of the more aggressive view with AMD of what semis can look like. Here's American Airlines. It's a wave 1 and a wave 2, another wave 1 and an ABC wave 2 between the 61.8 and 78.6% fib. So it's getting a little tight for American, but if we're above 13.94, maybe round it down to 13, this is a wave 1 and a wave 2. The minimum wave 3 target would be 30 before a shallow wave 4 and a wave 5 higher. The invalidation for that would be 10, which is a little wide. So that's why we'll talk about Southwest right now. But Southwest and Boeing and Disney, they all support kind of very bullish messages. So if we look at Southwest, this is kind of the bigger picture of what we could be seeing in the airlines. That from the low in 2009, this is a 1, 2, 3, 4, 5 wave 1 and a wave 2. When we zoom in, we could have another wave 1 and another wave 2. It lines up perfectly with Disney and a lot of airlines that this is a 1, 2, 3, 4, 5 wave 1. Now they're getting everyone out of reopening at the worst time, because we could see that Southwest ends a wave 2 at the 61.8% retracement. It's very close to where the length of wave A placed wave B high is where wave C ends. So a wider invalidation would be 31. The length of wave 1 placed at the wave 2 low says that Southwest can go break that high of wave 1, and it can go all the way up to 80 before a shallow wave 4 and a wave 5 higher. So Southwest and American, they give that kind of similar view with Disney that we could have a very substantial opportunity in front of us. This is a 1, 2, 3, 4, 5 wave 1. This is a 30-year wave 1, and this is a wave 2 on the all-time chart. It's hard for us to think about, these long-term cycles. Some of these cycles in LA wave last several years. This could be a 30-year wave 1 and a wave 2. And then this could be another wave 1 and another wave 2. So if that's correct, then the minimum wave 3 target would be 250 before a shallow wave 4 and a wave 5 higher. Those 5 waves would all just end a wave 3 in the bigger picture. So that's Disney. It kind of shows that we could see a big opportunity in front of us, if we look at just like Southwest, it's a 1, 2, 3, 4, 5 wave 1 that lasts a year, then an ABC correction wave 2 between the 50 and 61.8% fib. We formed this nice little wick. What we could see is that we've been rotating during all this blood. We've been rotating into some sectors that we've been accustomed to call losers, and we might be seeing that we're rotating into a lot of sectors that we don't really think of very highly right now. This is a wave 1 and a wave 2. Disney shows that streaming stocks and reopening stocks could get a lot of money flowing into them. We could see Disney go into the 250s for a wave 3. A very tight stop would be 126. That's 61.8% fib. Then the length of wave 1 placed the wave 2 low says 250 is a minimum wave 3 target before shallow wave 4 that retests the wave 1 high. Then wave 5 would be the length of wave 1 placed at the wave 4 low. We can still see Disney go into the 300s, right? The 320 range ultimately could be on the table. It would take some time. It wouldn't be easy, but it lines up with a lot of reopening stocks and it lines up with a lot of streaming stocks. One thing I point out is that Draftkings and Disney kind of show that there's a mixture of growth and a mixture of reopening alpha in the future. For Draftkings, this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. So there's not really a reasonable high or a low to trade Draftkings against right now. This wave 2 low of 10 is pretty far, and we're at this wave 1 high of about 1950. So we'll talk about PENN as a better level for Draftkings, but it's that same idea with Disney that growth and reopening could do very well. Wave 1, ABC wave 2, we're right at that 78.6% fib. We can see Draftkings go into the 70s, into the 80s for a minimum wave 3 target, but that would just be the minimum wave 3 expectations. That's very high up. Even just breaking above 74, that's a huge return, but Draftkings could go a lot further than that. So they make growth investing difficult because one winner is worth a couple losers, and Draftkings kind of shows that getting into the 70s and to the 80s, that's a minimum wave 3 target in the future. So here's PENN Gaming. It gives better levels right now for Draftkings. And this is a wave 1 and an ABC wave 2. PENN Gaming is between the 61.8 and 78.6% fib. If it's above 33, that's a nice level that says, hey, this is the left side of the base. What we could see with Disney is that this is the right side of the base. Reopening is going to do really well. It's going to have a large, high volume base breakout. The left side of the base is loose, and then the right side of the base is very, very aggressive. The length of wave 1 placed at the wave 2 low, it says that's going to be a wave 3 into the 170s before a shallow wave 4 and a wave 5 higher. So it's all risk reward. It pins above 33, then just breaking this high of 142 is going to be a huge return, but that'd be the minimum wave 3 target before a shallow wave 4 and a wave 5 higher. So that's PENN. Here's Tesla. Here's NIO. I'll talk about EV right now. So the most aggressive view of Tesla we'll talk about in a little bit. Let's talk about the more conservative view. The more conservative view for Tesla, and I really think it's not really the accurate view. I think the more aggressive view is more accurate, but let's just talk about the more conservative view for Tesla. The more conservative view is just within the cycle from the March low. That's all we really care about. This is a wave 1 and a wave 2. This is a wave 3 and an ABC wave 4 at the 61.8% retracement. So what we talk about with Nvidia, what we talk about with AMD, a lot of times the more dramatic and the more scary correction is not a wave 4. Wave 4 is usually a bull flag, that sideways triangle before a big thrust higher. What this could be for Tesla is that this is a wave 1 and a wave 2. Conservatively, this is a wave 3 and a wave 4. We're going to hold above 696. The length of wave 3 placed at the wave 4 low says Tesla can go to 1494, call it 1500 for wave 5. Here's the thing, that's probably not accurate. That's probably not accurate at all. I think that the real count is that this is a huge wave 1 from the March low. This is a wave 2 ending between the 61.8 and 78.6% fib. So for a wave 2, the 78.6% fib can be a little tight for a high beta stock, for a very high beta stock like Tesla, but this most likely is a wave 1 and an ABC correction that ended wave 2 right around the 61.8% fib. The length of wave 1 placed at the wave 2 low says that 1500 is a minimum wave 3 target. We'll have a shallow wave 4 before wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1 placed at the wave 4 low, then Tesla can go into the 1900s, right? Tesla can be a wave 1 and a wave 2. The minimum wave 3 target would be 1400, 1490 before a shallow wave 4 and a wave 5 higher. So that's a very aggressive view, but if Tesla, I think it's the accurate view, is forming a wave 1 and a wave 2, then it's going to go very high. right? And that's going to be very good for NIO. It's going to be very good for XPEV. It's going to be very good for Lee and a lot of ESG. I think Tesla ultimately was a leading indicator that many of these clean energy stocks aren't just going to go break the January high, the first quarter high from 2021. They're going to go explode above this high. I think this is a wave 1 and a wave 2. Tesla's going to the 1490s for a minimum wave 3 target before shallow wave 4 and wave 5 higher. That's all very valid if we're above 696. So that's Tesla. That's very good for NIO. NIO is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. So yes, I was looking for NIO to hold above this low, right? But LA wave theories get to have stops too. I personally manage risk with growth by position sizing, lower positions for growth, because I know that they're going to make the best opportunities difficult and they're going to make retail feel like idiots. But I think this is a 1, 2, 3, 4, 5 wave 1. This is an ABC wave 2. Right where the length of wave A plays the wave B high is where wave C ends between the 61.8 and 78.6% fib. We just kind of talked about how Tesla's probably going to go to the 1400s to the 1500s for a minimum target. And more than likely, it's not going to just stop there. So I think NIO could be a big opportunity. This is a wave 1 and a wave 2. We're going to hold above 15 and go on a wave 3. The wave 3 minimum target in the future would be that we're going to break this high of 66, right? But that's a minimum kind of silly wave 3 target. The real minimum wave 3 target would be 85 before shallow wave 4 and wave 5 higher. So it would take time. It wouldn't be easy. But I think ultimately NIO will hold above 15. And like a lot of growth stocks show, this is the left side of the base. The left side of the base is loose. The right side of the base could be a high volume base breakout. So that's NIO. Here's XPEV. Here's Lee. Very similar ideas. I believe XPEV is a wave 1 and an ABC wave 2. I think this is another wave 1 and an ABC wave 2 between the 61.8 and 78.6% fib. So the widest level would be, I think, this low of 22. Lee gives a little tighter level. We'll talk about that. But realistically, growth, especially a stock like XPEV, has a high beta, right? The idea that, someone's going to have a 15% trailing stop, that's kind of a pipe dream. I think that's a wave 1 and an ABC wave 2, right? A 10% stop, a 15% stop, that's a value idea, right? Growth, that's just not going to happen. This is a wave 1 and an ABC wave 2 between the 61.8 and 78.6% fib. We could see a wave 3 begin, and that could take XPEV up to 77 before a shallow wave 4 and a wave 5 higher. So 22 would be a wide level, but what we just talked about, hey, Tesla's going to do very well. Hey, possibly NIO is going to do very well. So this could be very good. This is a wave 1 and an ABC wave 2. This is a little different than XPEV, but it's a very similar idea. This is a wave 1 and an ABC wave 2. This is called an expanded flat LA wave theory, I believe, where we make a marginal new high above this wave 1 high. So this is an A, B, C correction between the 61.8 and 78.6% fib. So 20 would be a tight stop. 15 would be pretty wide, just like XPEV, but I think both will end up being a wave 1 and a wave 2. Wave 3 could take a lead of 49 before a shallow wave 4 and a wave 5 higher. But the big deal is that would all be a huge base breakout. That would confirm that this is institutional accumulation on recent IPO stocks. Recent IPO stocks by nature have an extremely high risk-reward ratio, right? Because if it goes and breaks above 49, that confirms that this is a year of accumulation on a stock that's very early in its life cycle. So XPEV and Lee support the idea with a lot of IPO stocks and a lot of clean energy stocks that it's not just a wimpy, swing trade possibly. It might be something a lot bigger than that because the institutions have been treating it like something a lot bigger than that. It looks like they've been accumulating this for a long time. This could be a wave 1 and a wave 2. XPEV and Lee could go break above that IPO high. So that's XPEV, that's Lee. Here's QCLN. I believe this is a wave 1 and an ABC wave 2. We're right where the length of wave A plays the wave B high is where wave C is ending. So if we're above 44, even if there's a little more blood, I think ultimately it's a wave 1 and a wave 2. We're going to see that this first quarter high that Tesla's already broken, that Enphase Energy's already broken, that First Solar's already broken, the first quarter high from 2021, I believe will be broken for many clean energy stocks, including this entire ETF. And it's going to be a very pretty base breakout. Right? If QCLN was above 90, every classical trader in the world will be saying that this is a gorgeous base breakout, right? This is a huge base. The left side of the base is loose. The right side of the base could be a high volume base breakout. The length of wave 1 placed the wave 2 low says that this entire ETF going to 120 is a minimum wave 3 target. So if an entire ETF that mostly holds Tesla, NIO, and Enphase Energy and a little bit of semiconductor stocks are going higher to 120, right? If it's doubling, then the top holdings could be dramatically outperforming. So above 44, QCLN gives nice levels. Here's Visa. I think Visa gave PayPal bulls a gift. Visa gave PayPal bulls a gift. Also, last night, I heard that Jim Cramer, I saw the video. Jim Cramer apparently got extremely bearish ARK. And apparently he used to be bullish ARK, but Anyway, go watch that video. That was very funny. But we have the Kramer effect right now. We also have the Visa effect supporting that this is a wave 1 and an ABC wave 2. So why am I correlating Visa and PayPal? Because they're in the same iPay ETF. They both sold off together from the late July high. And what I've been saying was, if this is a wave 1 and a wave 2 for Visa, what we could see in the future is that Visa is above this wave 1 high. It's above this July high, and Visa and PayPal are both 6% holdings of the iPay ETF. So most likely, Visa could be a leading indicator in the future that this is a wave 1 and a wave 2. If Visa is above 190, it's within a wave 3 right now. The minimum wave 3 target is the 260s before a shallow wave 4 and a wave 5 higher. That would be extremely good for PayPal and Square because Visa is going to carry the iPay ETF much higher, and we're going to see, I believe, that Visa is a leading indicator. The sell-off in PayPal from July is an ABC correction that's going to end a very important wave 2. The length of wave 1 placed the wave 2 low says Visa is heading into the 260s for a minimum wave 3 target before a shallow wave 4 and a wave 5 higher. And I believe that's a huge leading indicator for PayPal. So I think PayPal is a massive wave 1 and an ABC wave 2. What I'm trying to point out is that both PayPal and Visa, both 6% holdings of the iPay ETF, sell off together. And now Visa might be a leading indicator that, yeah, that is a correction. The length of wave 1 placed the wave 2 low says between the 61.8 and 78.6% fib of 130, the length of wave 1 placed the wave 2 low can take PayPal to the 380 range for a minimum wave 3 target in the future. It won't be easy, but it lines up a lot of what we see, the idea that growth stocks, the idea that a lot of stocks that we've called weak losers throughout 2021 were being aggressively accumulated by institutions. I've heard a lot of stories about many retail traders that had a lot of margin, and now they don't have any growth stocks, right? They've given their growth stocks back to their brokers, back to the institutions. So I don't trade growth with margin because I know that they're going to really try to get traders out. The length of wave 1 placed the wave 2 low says between the 61.8 and 78.6% fib, we're going to hold above 130. The length of wave 1 placed the wave 2 low says 380 in the future would be a minimum wave 3 target before a shallow wave 4 and a wave 5 higher. We'll talk about the iPay ETF. Where are we getting these correlations? Well, they're both 6% holdings of the iPay ETF. And if Visa is already kind of above this high from this summer, then what we could see is that this is a wave 1 and a wave 2 that ended between the 50 to 61.8% fib. So if we're above 46, that's a nice level for PayPal. That's a nice level for Square. They're both in this ETF. The length of wave 1 placed the wave 2 low says that iPay is going to go break above 73. It could even go all the way into the 90s. So that's very good. If we're above 46, iPay, Visa, and Square, they could all have nice rallies together. Let's look at Square right now. I thought they were Block, now they're Square. They changed their name a lot. But what I loved is that during the Apple earnings kind of recently, a lot of retail traders apparently got a good reason to be bearish SquareCash. So apparently Apple announced something that's super bearish for SquareCash. So a lot of retail traders think that there's a very good reason to be bearish SquareCash between the 61.8 and 78.6% fib. That's very interesting. So right where we're at the 61.8 to 78.6% fib, right where ARK's at the 61.8% fib, we have Jim Cramer getting super bearish. We have a lot of reasons to be bearish SquareCash, and we have potentially a huge leading indicator that Visa and PayPal are going to go break the July high. So I like that. The length of wave 1 placed the wave 2 low says that they are getting everyone who was on margin out of Square for a good reason. Because Square going into the 350s could be a minimum wave 3 target in the future before a shallow wave 4 and a wave 5 higher. One thing I like about Square is that this is a huge wave 1 and a wave 2 in the bigger picture. So the more degrees you have in elite wave theory, the more chart history you have, the more evidence you have. We talked about recently the idea that Twitter kind of does the same thing, a huge wave 1 and a wave 2. I think that Square is another kind of software social media growth name that has more evidence than just within the cycle from the March 2020 low. It's got a whole, life cycle of history that says this is a wave 1 and a wave 2. Most likely this is another wave 1 and another wave 2. The length of wave 1 placed the wave 2 low says that a wave 3 target in the future could be the 350s, the 360s. So above 87, a lot tighter would be 101, right? There's a lot of risk reward in Square. So here's ARK. Jim Cramer apparently got super bearish ARK. Man, does he not know about the 61.8% fib? The length of wave 1 placed at the wave 2 low says that ARK can go break above the high from February, the high that a lot of growth stocks like, a lot of software leaders like Cloudflare, a lot of clean energy leaders like Tesla, they've already gone and broken this high. I believe this is a wave 1 and an ABC wave 2. We just talked about a lot of evidence that PayPal could be turning around. That's going to be very good for ARK. I think this is a huge wave 1 and wave 2, the length of wave A placed with wave B high is right where wave C is ending. We got this little doji candle, this indecision candle on the weekly chart between the 61.8 and 78.6% fib, right? So it's all risk reward above the 78.6% fib, which really lines up with this high of 60. We could see that a big wave 2 correction ends. And this is the left side of the base. The right side of the base could be a very strong, very explosive base breakout. So I'm looking for ARK to hold above 60. It's got a lot of upside if it does. So here's Roku. It's a very similar idea. How about Roku and Snapchat together? If we see that a lot of social media stocks like Twitter and Snapchat are turning around, a lot of fintech stocks like Square and PayPal are turning around, a lot of ARK holdings in the clean energy sector like Tesla are doing really well, it's probably going to be very good for Roku. This is a 1, 2, 3, 4, 5 wave 1 and an ABC correction wave 2. It's almost identical to Snapchat. This is a very quick ABC correction. The length of wave 1 placed with wave 2 low says that Roku can turn around, hold above 125 and go into the 600s, right? So people thought Roku could be the next Netflix. I think they were right. But guess what? Netflix has done this twice. It almost just did it again. But I think this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. If Roku's above 125, it is the next Netflix. Potentially, the length of wave 1 placed with wave 2 low says you should look at that Netflix in 2011 chart, right? Look at Netflix in 2004. We can see why they make growth stocks very difficult. This could be a wave 1 and a wave 2. The length of wave 1 placed with wave 2 low says PayPal is going to turn around. Tesla's going to do really well. ARK could turn around. And Roku could outperform all of them, right? Roku can go the length of wave 1 placed with wave 2 low. It can hold above 125 and it can do quite well. So it's a streaming giant. I think Disney and I think Netflix are great evidence for Roku. So let's talk about Netflix right now. Bill Ackman bought Netflix. I think that's pretty cool. He's a pretty smart guy. He only picks like 5 or 6 stocks. So if he buys a stock, it's because he really likes it. I think this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. So Bill Ackman famously said, hell is coming, during that March 2020 crash right at the low. I think this time he realized you buy the blood. This is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 between the 61.8 and 78.6% fib. If Netflix is above 331, Roku might be the next Netflix, but Netflix is still the current Netflix. This could be a massive wave 1 and a wave 2. If Netflix is above 331, then a lot of streaming stocks like Disney and Roku are going to be rallying with it. We could see in the future a minimum wave 3 target, as wild as it sounds, could be in the 800s. I think we're going to hold above the 78.6% fib of 331. And most importantly, we're going to see Netflix go break above this high. There's a lot of stocks that kind of have this deep, very quick ABC correction. This could be a wave 1 and that very scary wave 2 that is going to be followed by a massive wave 3. And as wild as it sounds, Netflix in the 800s will be a minimum wave 3 target in the future. So there's a lot of risk reward. There's a lot of streaming stocks that say, hey, the streaming sector is going to do really well. And when we look at the Disney chart, we see that maybe growth and reopening, maybe they're not weak losers. Maybe they're getting aggressively accumulated throughout 2021. And now we're going to see why in 2022 and beyond 2022. So here is Snapchat. I think Snapchat kind of shows, very similar to Roku, that this could be a bigger deal. This could be a massive 2-year, 3-year rally that is very quickly being corrected. This is a 1, 2, 3, 4, 5 waves impulse that is very cleanly subdivided into 5 waves. This wave 3 is very cleanly subdivided into 1, 2, 3, 4, 5 waves. So there's a lot of evidence, in my opinion, that this is a wave 1. At least at the very minimum, it's an impulsive structure. This is a wave 1 and an ABC wave 2 between the 61.8 and 78.6% fib. So I talked about Twitter recently. In Snapchat and Twitter, they're probably going to do the same thing in the social media sector. I believe that this is a wave 2. If we're above 21, the 78.6% fib, this is wave 1 and wave 2. Snapchat can go break this high of 83. And if it does that, the minimum wave 3 target in the future could be 100. So Snapchat going to 100, it sounds crazy right now. It's going to be a long journey. But if we're above 21, then the next stop could be this wave 1 high of 83. That would confirm that Bill Ackman, he knows what he's doing. He's buying growth because this is a bloody moment and it's going to result in a lot of upside. This is a wave 1 and a wave 2. Anyone who was a retail trader that was on margin, they're out of Roku, they're out of Netflix, they're out of Snapchat. I think we're about to figure out why. Those were all wave 2 corrections. And if we hold the 78.6% fib, there's a lot of reward. There's not that much risk. So here's Bitcoin, here's Ethereum, here's hot mining. Obviously, there's not that much risk on a relative basis. They can always gap through the 78.6% fib, right? That can always happen. Here's Bitcoin. I think this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 on the larger degree. All that really matters though for Bitcoin, for Ethereum, and for hut mining, for most of the cryptocurrency sector, will this June low hold in the short term, right? If the June low holds in the short term, then this is a wave 1 and a wave 2 for Bitcoin. The length of wave 1 placed at the wave 2 low says 73K is a minimum wave 3 target, right? But if this is a wave 3 target of a larger degree wave 3, Bitcoin is not going to stop at 73K, okay? This is to get a minimum target. This is to get a kind of conservative expectation. If we're above 28.9K, Bitcoin's not going to stop at 73K. It's going to have a wave 3 way past that, have a shallow wave 4 that retests the wave 1 high, then wave 5 could be the length of wave 1 placed at the wave 4 low. That could take Bitcoin to 109K to end a red wave 3 on the larger degree. So there is a path that takes Bitcoin to 100K. The shortest term view is going to need it to hold about 28.9K. So that's Bitcoin. It's between the 61.8 and 78.6% fib. If we zoom in onto Ethereum, we'll see a lot of evidence in the short term that this is a nice 1, 2, 3, 4, 5 waves impulse. This could be an ABC correction ending at the 78.6% fib. So very similar to Bitcoin. If we're above this June low, this is a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low could take Ethereum way up to 5.3K before a shallow wave 4 and a wave 5 higher. Let's talk about hut mining right now. Hut mining is a very similar idea. They all kind of have this June low to trade against. So I think that these are very important gauges for the entire crypto sector, the entire crypto mining sector. This is a wave 1 and an ABC wave 2. This is a 1, 2, 3, 4, 5, another wave 1 and an ABC wave 2. If hut mining, if Bitcoin and Ethereum, if they're above the June low, that's the risk. The reward says that that was all wave 1 from the June low. This is a wave 2. We're going to hold above the June low and go on a wave 3 that takes hut to 17 before a shallow wave 4 and a wave 5 higher. It'll take Ethereum to 5.3K conservatively, and it'll take Bitcoin to 73,000. But those are all pretty conservative. Realistically, wave 3 goes a lot further than that. So there's a lot of reward in crypto. The risk is that we break below the June low.